Good morning, everybody. It's the 20th of October. It's a Monday. We've got a wonderful lineup for you. We're going to go through some big Asian moves. We're going to go through, of course, the regional banks, the story from last weekend. And the one, the only Chris Beecham is joining us to give us his week ahead as well.
Good morning.
How are we doing?
I'm very well. How are you?
Late night. He's in a bad mood this morning because he's hardly slept. So
I missed my stop on the tube. But it's good though.
How did you manage that?
I did because I fell asleep. Usually I wake up from Moorgate, but it was good because it's chucking it down outside.
Right.
So I didn't have to walk.
So you're on the tube for a long time then?
Yeah.
Yeah.
I get on right at the other end. Zone 8.
Wow, I didn't.
You know it was a zone 8, did you?
No,
exactly.
So where did you end up? Did somebody wake you up? Or?
No, I just woke up at Liverpool Street and then just got the Central Line. But it saved walking in the rain through Moorgate, so actually we worked out quite nicely.
Shall we have a little weather check this morning? We've got to look at it, don't we? This is the kind of morning that anybody who can work from home wakes up and they look out and they hear the rain and they think...
It feels like that in the office this morning.
Yes, I would imagine.
Everyone's gone, nah, can't be bothered.
So good morning to our social media team. Not that they'll be awake yet. When they're watching Trade Later with IG, then...
Trade afterwards with IG.
Yeah, good morning to them. Good morning to you all.
It's an issue why they don't like you, really, isn't it?
So who we got then away from the numbers? Andrew McKelvey saying expect it to be a good day for defence holdings. Stop talking your own book, Andrew. I would never do such a thing. As they say, multiple sovereign AI products are in development and soon to be in deployment. Wow, that does sound positive, let's be honest. Funky Gibbon, good morning to you. Friar Tuck, Julie and I to Rock, and Donny. Let's see what is coming up on today's show. We got a special guest for you, not the one sitting opposite me. He is a special presenter, not a special guest. And coming up at 8:30, Imran, that's back from Credit Suisse Citigroup. The banks are in such focus at the moment, I thought I would get Imran back in. So Imran Laka joining us 8:30. We're going to be talking about all things banks, the debt cycle. We're going to be talking about options and how Imran is seeing some volatility plays at the moment. And then, where's Axel off to now?
He's in Japan. Just that must be why the Nikkei hit record high, because Axel's arrived in Japan. But yes, his ankle recovered in time for him to go to Japan, so he's gone there.
Business or holiday?
Pleasure.
Yeah. So interesting.
Gone off walking in Japan or something.
Right. He does have some very interesting holidays. Actually.
He does. He's always wanted to go to Japan, apparently. So he's finally persuaded Mrs. Axel to go for there is one to go to Japan. She wants to go to China again, apparently. So right. They've gone to Japan. So you get me doing Trade of the Week. Where's the dramatic music for that? You know.
Dun, dun, dun.
Yeah, exactly that kind of thing. Halloween music. That would also do, yeah. Well, he's not. Anyway, sorry. I need to come up with one in the next sort of hour or so.
Let's go to overnight action and have a look at Friday's and the weekend's action, because you were certainly paid for taking risk over the weekend in the world of crypto. That's right. So the normal thing, everybody was scared to hold crypto over the weekend. So of course it's had a huge pop higher, not just yesterday, but also overnight as well. So we can go straight into a nice little Bitcoin. Oh, it's gone again since I first looked at it this morning. So we can see here, so actually let's take it back to the weekend before and we can put everything into. So here we go. There's the Friday night move and the Saturday morning. And you can see it. We are actually exactly where it had dropped to. Subsequently sold off during the week. There was some big selling during the week. Bitcoin taking it as low as 104. And then the pop-up there, you see back to 111,000. So we are, flying.
Storming recovery from Bitcoin, because it was very much, crypto winter, bad times for crypto after a huge rally.
Exactly.
And it comes off. Obviously, the volatility is a given with crypto. You have to remember this. And I think people seem to forget this really easily, which is odd.
Well, the vol has been taken out of it though, because
yes, it's calmed down. If you remember in the good old days when it was $4, whatever. It was absolutely bonkers volatility. So yes, the more institutional it becomes, the less volatile it has become. But it's still, compared to everything else, still more volatile, isn't it?
Yeah, especially on a Friday night.
Yeah.
When, liquidity. As soon as the ETFs close, then boom.
Precisely.
Boston Frank, rich is a good name for an investment guy. Yeah, I haven't met anybody called Loss, actually. Or Poor. Standard and Poor's.
Yeah, Standard and Poor's.
Yeah.
Look what happened to them.
Could be R&P.
Rich and Poor's. Rich and Poor's. There we go.
Yeah. So Ethereum strong as well. You can see that. So Ethereum approaching 4,100. So yeah, nice little weekend.
Sea of blue across crypto prices this morning. Doesn't quite work as well as sea of red, does it? Unfortunately, but yeah, definitely.
The blue sea.
Yeah.
And there we are with the same on the S&P 500. So it was up 50 basis points on Friday as we got through Friday without any more headlines, and the regional banks reported decent numbers. So regional banks up 1.7%. Zion's Bank actually bounced strong. It was up nearly 6%, and Western Alliance up 3%. The KBW as a whole was up 1.7%. And yeah, we've got a bit of a graphic there.
Oh, a graphic.
Producer Phil tapping away, getting one of the specials up. There we go. All right, take us through that, Mr. Beecham.
Look at that. And that VIX, of course, hit. I don't know if I'll get up the charts in a minute, but VIX down 1.3%. Nikkei absolutely surging because the new, I can't say her name, I'm not going to, the new Japanese, you did it, you can say her name.
Yeah, Takaichi.
Takaichi looked to be confirmed in power, so 3.2%. Hang Seng up 2.2% off the back of Trump saying he expects to go for a jolly to Beijing to meet his favourite person in the world again.
Besant is going to meet.
Besant, yes.
Is it this Friday?
Yes, because there were comments on Friday, wasn't there? There was Trump comments about that he doesn't want tariffs to remain in place. And then Besant, they are talking to their counterparts and they'll go and have a meeting. So again, it's the sign of talks, always gets the market rallying, and lo and behold, there we are. So
it's nice. So it's a nice positive start. However, I was talking to a friend at the weekend and wasn't happy because she was having to work all weekend as head of one of the fixed income departments at one of the big banks, because they have to do a presentation to the bosses this morning on all their exposure. So I would imagine that this is exactly as we'll be seeing across every investment bank, every private equity fund. Get your bloody house in order and tell me what your exposure is to these NDFIs.
yeah,
Because nobody wants another margin call type event
no,
with the movie rather than the actual margin call itself. That they get surprised what they've got in their books. So that's the whole weekend, all these banks are going to be getting out. Now, normally, that uncovers something, right?
that's the danger. If you go looking for stuff, you tend to find it, don't you?
And then you've got to take action, and then so do we see credit markets completely normalize, or is there a little bit of liquidity, pullback in liquidity there over the coming weeks? Who knows?
Maybe. I mean, this is echoes of 2023 in Silicon Valley Bank, doesn't it? And that's the sort of playbook that everyone goes back to. But of course, they have the processes in place to deal with it now, really. And as Jeffries was saying on Thursday, it looks like it was overdone.
Well, that was treasuries, right? that was not fraud. This is outright fraud.
Outright fraud, but it looks like it's a sort of confined to certain. It doesn't look systemic, put it that way. That was the key word, wasn't it, from 2023? Is it systemic? Is it the entire banking system? The answer was no.
Yeah, because it was a treasury position. But this time, First Brands has gone bankrupt and gone bankrupt with fraud. And everyone said, oh, it's fine. It's a one-off. Zion's proved it wasn't a one-off. Yeah. Western Alliance proved it's not a one-off. There are cockroaches out there.
There are, of course, and that's the concerns. But it was, I was saying to you before we started, how sentiment shifted so rapidly to, and I was asked this on a radio interview on Friday, is this 2008?
Yeah, what were their line of questions?
It was the questions of talk about turmoil in markets this week, and it is another crash coming. Is this 2008?
But yeah, I mean, it's so absurd. It's such a media.
It
thing,
is,
isn't
but it's and there was a big column in the Daily Mail of the weekend because I went to see my parents, and then my dad said, "Have you seen the column in the Daily Mail about this? Alex Brummer is in another massive crash coming. This kind of thing. And
it's ridiculous.
Feels
it doesn't have
very
to be
crashy. It feels very sentiment. It feels so.
That's just media, though.
But it's interesting how you've had a stock market that's gone up relentlessly for months, and then you've had one choppy week. And it was because you had, obviously, the Friday before was the first trade thing, and then it seemed to recover, and then it sold off again during the week. And you had 1 week of essentially sideways price action that felt quite dramatic. And suddenly the comparisons were coming round, and then you had a US banking crisis. And it was interesting how everyone's immediate reaction was to go to, oh.
Yeah, but let's take the sensationalism out of it, right? You've got market all-time highs, and you've had abundant liquidity there for private equity to leverage up as much as they want. The question is, does that liquidity now slow down? It doesn't have to be a crash. It's just a slowing down of liquidity. And let's not forget that the US economy is AI and CapEx spend. Underneath the surface, clearly, there's some shit going on.
There is always something going on, and I think that the sensationalism is almost part of it. The way people are sort of immediately latch on after years that they're perhaps justified nervousness at record highs, and the sense that maybe it's running ahead of itself.
But the underlying economy is in recession. There's parts of it clearly in auto supply.
Parts of it is suffering. Yes, I think it's probably extreme to say. I think Lombard's been very good on this. That the US economy it's not just AI. There's more to it than just AI, because there's a lot more going on with the rest of the economy. Yes, there are parts that are suffering, but to say that GDP is being driven entirely by AI is probably a mistake. I think this is the point the FT made as well last week. I just think it was notable how you had those sort of comments and columns over the weekend.
Then you don't have to cut interest rates then, if it's
well, because I think that we are still living in the aftermath of 2020, that you had the economy shut down, then you reopen it, and you had massive job creation. Obviously, you had the inflationary move as well. And then the rate of job creation was so huge that now it's slowed down. And the Fed is almost panicking, in a sense, about what they think is a stall speed in the US economy, because you've got zero job growth. Sounds very scary, understandably. But if that's simply the case, that it's a reflection of how strong job growth was 2 or 3 years ago, that it's perhaps natural that you have this hangover that we're still processing. The US economy is not at stall speed, and yes, the net job creation is not there, but it is not. We're not poised on the cusp of crisis, but it is necessary for the Fed to cut rates just to keep it ticking along. And I think it's, as we've said before, there are good rate cuts and bad rate cuts. I think we just about still fall into the good rate cut category here. Maybe if we get some more banking crises, it tips over into the other kind. But we'll have to wait and see with that.
Well, so the spreads are starting to price in some kind of distress in the debt market.
Which, of course, is what you want them to do, to an extent. You don't want them to be blithely whistling past the graveyard. There's nothing wrong. Everything's fine.
But the next stop after that is that they have to stop QT. So it more like a 2018.
Well, yes, and then exactly, and then the Fed responding. So it's also yes. I think the potentially stopping QT line didn't get as much play last week as it probably should have done. That the Fed is again prepared to provide the liquidity as well where it's necessary, which will then set off the whole argument about QE and etc. Are they supporting financial assets? But it simply is what it is. That they don't have to carry on with QT permanently. They can turn it on and off as needed, and if the time has come to turn it off or to stop doing it, I'm getting confused now what they're doing.
It's just
then maybe it's necessary. Maybe it's good. I think it's always notable the way the VIX had surged to its highest level in what? I mean, looking at this on our platform, I think it's on full screen, but I did try to put it on. Oh, okay. Sorry, I apologise to the gallery. They were right. That VIX, the highest level there since the end of April, which seems quite bonkers.
Well, really. I think you're absolutely crazy. So you're getting a slowing jobs market, and now you've got a potential slowing of liquidity and financing,
which the Fed
of course the VIX is going to go up. You're at all-time highs. You're going to want to take out insurance.
But again, maybe it's a reflection of how panicky people still are, and the fact that I know you're not a fan of the CNN fear and greed, but that went to extreme fear last week on what was just a choppy week after months and months of gains. I think shows you how people are still sort of jumping at shadows almost.
Jumping at shadows, you've got completely blind economic data. You have no idea what the job market is doing.
We don't know where the job market at the moment is. We don't fully know that. And obviously the CPI is delayed because it's Friday. We should probably do the week ahead, shouldn't we? But
yeah, that's a perfect intro into it.
Yeah, this is also the key thing that you've got. It's a week of inflation data, isn't it? Actually.
So UK CPI, we start off with Canada.
Okay, Canada first. So that's
Canada first. Is that you doing a promo for them?
That's me. Yeah, that's my pro Canada or loyal North America, as we should call them, I think. And then obviously it kicks off again with UK CPI on Wednesday. Probably going to make the Bank of England's life a bit harder because it's supposed to rise on most of those metrics. And Chicago Fed and existing homes. So no initial jobless claims again on Thursday. That is the expectation because they are officially delayed. But the others, I think, are still supposed to come through. And then it's the big one on Friday.
Dun, dun, dun.
Again, inflation rising in Japan. Another one to watch there. UK retail sales. PMI day as well. So busy day on Friday.
It is, isn't it? At last.
US. Flash PMIs across the globe. The key ones to watch the German manufacturing one, which isn't supposed to be great. UK PMIs. Slightly better. Tiny bit of good news there from poor old Rachel Reeves.
Poor old.
I know we feel sorry for her. And then, of course, the biggie, CPI, expected to have risen a little bit, although core CPI holding at about 3.3. In fact, slightly down from where they were in August.
So there's a question around the playbook now as well. So, we've given up on inflation targeting. That's quite clear. Now happy to run at 3%.
Yeah, which maybe they're right to do. Maybe the 2% was the hang-up.
Well, then announce it. Don't stick with the 2% target that you know.
Yeah, I mean, in the good old days, the Fed just used to raise interest rates and not tell anybody. And then sort of in the early 20th century, they just didn't do it. Didn't have an announcement. They just did
right.
So maybe they should go back to that really. But yes, I suppose the inflation targeting, maybe they should look at 3% because 2% is arguably a reflection of what was the phrase for the Bank of England? The nice decade, wasn't it?
Which decade was that?
Non-accelerating inflation rate of unemployment, the sort of 2000s, the post-2001.
Right, okay.
Somebody on the chat will know what the phrase was about not inflation and not having an inflationary economy. But yes, so maybe the Fed does that. And we'll see where the CPI data comes in, particularly.
Right, and then who are we hearing from? There we are. So think of the blank Monday, and then I'll show you there we go. So 21st is when we start. We get Netflix after hours. We get Coca-Cola pre-market, Lockheed pre-market, along with GM and Halliburton. Then you get Tesla on, now is Tesla pre-market? It is, isn't it?
No, Tesla's post-market.
Tesla post.
So Wednesday evening.
I can never remember. Oh, yeah, of course, yeah. But and then Elon comes on with his conference call afterwards.
Yeah.
IBM, and then you've got Intel on Thursday, along with Ford and American Airlines, Freeport McMoran. And then in the UK, good old London Stock Exchange there on Thursday, along with IHG, RELX, Rentokil, and Unilever. So Thursday, quite a reasonable day for the FTSE actually. There's a few.
Yeah, it gets a bit busier really in terms of earnings data, so that's the one to watch. A few more coming through, Intercontinental Hotels and Unilever, so interesting dividend players there.
And then talking about dividends, Thursday dividends, you've got BAE Systems and Moonpig, that's a big mover. And then JD Wetherspoons.
Spoons comes out, doesn't it? So 250. So watch those names on Thursday.
Mark your card on Moonpig. We front page of the newspapers. We have, of course, it's all about Trump and Zelensky. A big argument again. Yeah. Heated debate in the White House as Trump tossed aside maps of Ukraine frontline.
Yes.
And told him he's going to get destroyed.
Yes, he seems to have Every time he gets on the phone to Putin, he seems to... Trump really still sort of has the opinion of the last person he spoke to.
Oh,
and this is what must drive European leaders mad, because you can go and tell him that white is white, and then he'll bring up Putin, and Putin will tell him that white is black.
Yeah.
And then you have to go back and do it
Or
all.
red.
Yes,
What is
and
the
go
red?
all back again. And so, yes, it was apparently a very stormy meeting. Profanity was used by the president, unfortunately. So it does not look to have gone well at all.
And then, of course, we've got, their Friar Tuck there saying that rare earth stocks still in focus. The Financial Times also has an article. If we can pop that, please, guys. Rare earth shares soar. US and China, of course, Pensana, remember that's included in that. Then we've got Thames Water. UK profit warnings rise as business blames trade tariffs and policy shifts. So that's basically along the lines of it's not just businesses worried about their spending now, it is also the consumer. You've got problems with consumer spending now as well, and that is hitting confidence. On the Times, let's see, we've got weak consumer confidence blamed for profit warnings, also running the same story. The media love it, don't they?
Everyone loves a profit warning. Get one from B&M this morning, actually, so we'll come to that later.
Oh, really?
Yes. And the CFO leaving
that's
on the same day, so they discovered a mistake. So that's...
Oh, more fraud. I mean, sorry, more
Not
mistakes.
fraud, you can't say that live TV.
More mistakes. It's never a sign of a late cycle of an economy, is it? Fraud and accounting errors.
Exactly, yeah.
Right, China. We've got a GDP number 4.8%. That was in line this morning.
China.
And
Close to 4.8. Rachel Reeves would give her right arm for 4.8.
Oh, my goodness, I know.
She'd give both arms for 4.8% growth, I should think. But yeah, there you go, the B&M news.
Right, so Mike Schmidt, CFO, was to step down after the troubled 7 million of overseas freight costs had not been correctly recognised when it updated the market. Is 7 million big in the grand scheme of things for them?
Well, but if you look at it's a 7 million cost, but then it means adjusted profit now is supposed to be sort of 30, 40 million pounds lower where they expected. So it's had a nasty...
So it's a profit warning.
Yeah, that much is a... you always have this...
And they've thrown him under the bus.
I'm sure a lot of the viewers will get this. When you're looking at RNSs, it's always the ones with the innocuous headlines that contain the shockers. It's always something like, CEO had a nice weekend. Oh, and by the way, massive profit warning. This kind of thing, update on something, update on our new logo. And then, oh, and by the way, here's a profit warning. It's always the way with RNSs. It's becoming more and more
This is literally, this is a 40 million pound profit warning that they're arguing is caused by a 7 million accounting error.
The numbers, I have to say, they don't really...
Oh, well, the market sniffed it out already, look.
Well, that's poor trading as well. But yes, a terrible, terrible performer, B&M, really, in a sector that's... I've never been a B&M. Have you been a B&M? I've never been in a B&M.
Boston Frank asking, what are Putin's terms? Putin's terms now is he'll give up the eastern part of Donbass if he's giving small areas elsewhere. And so that is Trump's terms now that he's gone with.
Yeah.
Trump, the special envoy.
Yes, Putin wants the Donbass and will give them tiny bits back, but they've not made any progress in the Donbass for months. And it's also, if you do that, you unhinge the entire defensive line the Ukrainians have constructed. So that there's nowhere they're giving this back.
No.
I think. Because it's interesting how Zelensky went to Washington. I think he offered him thousands of drones in return for Tomahawks, these cruise missiles.
Yeah.
And there was just nothing doing because of the timing of a call. And unfortunately, to give Putin his credit, he knows he's not very good at getting Trump on his side, because we had reports as well about the Alaska meeting that came out about how Putin droned on for hours about his historical claims to the region, and Trump just lost it with him. But he is able to sort of, just when the president seems about to tip over, he can sort of knock him back into position and have another chat.
Yeah.
So it just goes on and on, really.
Nothing to do with photographs in Moscow back in 15 years ago. So 116 of you watching now. Are you subscribing and giving us a like? That would be wonderful. Give us the thumbs up there. And we shall go to a break now. We'll be back in 2 minutes with the opening bell as we get off and running Monday. It is a blue Monday. We're looking up, up small, as Rachel Reeves talks about incentivizing people to buy British. Do you like the sound of tax-free trading? Well, that's exactly what spread betting enables you to do. This tax-free way of trading lets you speculate on the price of over 17,000 financial instruments, like shares, indices, forex, and commodities, without actually owning them. With spread betting, you can benefit from both rising and falling prices, letting you find the perfect opportunity. So if you think the market's going up, you buy. If you think it's going down, then you can sell short. Not only is spread betting exempt from capital gains tax, but it's also commission-free. All you pay is the spread. With us, you're not alone. You're part of a wide community of traders that you can learn from. We've got the experts, the tools, and extensive educational resources to help you on your journey. If you're not quite ready to trade with real money, you can always give it a go on a demo account. Open an account today, join the conversation, and be inspired to make moves. Welcome to the Art of Investing, a brand new podcast to help you achieve your investing goals. Join me, Rich McDonald, and my co-hosts Mark Spice Holden and Chris CJ Fellingham every Friday when we bring you updates from the markets and insights from our combined 100 years of investing experience. If you're looking for flexible ways to trade financial markets, whether you're experienced or new to trading, you've come to the right place. CFDs let you speculate on the price of financial instruments like shares, indices, forex, and commodities without actually owning them. You can benefit from both rising and falling prices across 17,000 markets, letting you find the perfect opportunity. So if you think the market's going up, you buy. If you think it's going to go down, you sell. When trading CFDs, you're trading on leverage. Now, leverage lets you trade bigger positions with less money up front. So this increases your profits on your trades, but also remember your losses are also Right, we'll take a quick look at my portfolio then, see what we did. Remember, we traded on Friday morning. Still got the Diageo, so we're long some Diageo, we're long some British American tobacco on the defensive stance. And then for US-wise, still got Marvell, still got Nike. And then what was the other one? Short a bit of Rolls-Royce, long the Pfizer, short Rigetti. Rigetti, the CEO, so this is the quantum computing.
Oh, yeah.
CEO has sold all his shares. I mean, come on, if there's ever a sign.
That's going to be fun for the PR department this morning, isn't it, really?
Well, no, sorry, this was Thursday, so that's not new news, but Thursday. I'm short Starbucks. Short Starbucks, that is hurting so far. I'm short at 82. They're trading
It's a bit of a
85.
grind, isn't it, shorting Starbucks?
Yes, nice. Nicely done. I like that a lot.
Oh, don't go me gallery. This is probably what I've
And then Whitbread. Yes, I wanted to cover Whitbread.
Shocker.
So let's do that in fast markets at 8:15. I am long Whitbread. I'm going to be buying more this morning. We got the details of a meeting with the management on from Thursday. got a good breakdown of everything that was said there. And yeah, I'm looking to pick some more up this morning. I've also bought some European banks on Friday. So European banks, just to remind you, UBS was down 7%, Barclays was down 5%. They are up strong for the year, so I'm not, I'm not married to the position, but just for a small bounce, bought some of those. Right, what bell are you going for? Are you going for the London Stock Exchange
Is that one
bell?
approved? Is that the approved
Go
bell?
on. Yeah. Boise won't be happy, but...
Sounds like a bell you use for someone tea or toast in the morning, isn't it, really?
What, from my mother? I used to, yeah.
Have my breakfast now, please.
Right, HSBC up 1.7. So there you go. The banks are recovering because we've managed to get through the weekend without any more headlines and new negative ones. So Rolls-Royce, brilliant. There we go. There's my short, up 2%.
Where's the Axel quote for that one? Sorry. No, you lost it.
Funky Gibbon asking, will Rolls-Royce start to gain on Trump's position on Ukraine? Well, it depends. Depends how you take that, isn't it?
Yeah.
But the Pru up 1.5, NatWest up 1, Schroders, Scottish Investment Trust. Yeah.
History at 1.1%. Is that off the Galliford Try news, I think, this morning? The contract news for them, so that might be interesting.
Contract news and Vistry.
No, contract in Galliford Try, but I suppose there's a read across there, maybe.
Okay.
Spitballing on that news, but yeah.
Lloyd's up 1.4, NatWest up 1.2. So it is the banks leading the way and rollers, along with some of Barclays up 361. Then we've got mining stocks, copper. That's the other thing I've got. So I'm long copper, short gold and silver. That had a great day on Friday. Copper up 70 basis points this morning at 507. So we got Antofagasta bouncing. IHG up 30 basis points ahead of numbers this week on Thursday. Do you want to go through the loser?
Let's see what we've got on the downside. Oh no, train line delayed 2.4% down. I can't think of a better pun. I'm sorry, that wasn't very good. Hammerson,
Steaming this morning.
2%. 1.8% off on poor old Marks and Spencers and ABF. Is that
Marks?
Consumer-y focus this morning, isn't it, in the losses? Why is that off the Time story?
Yeah, but it's a bit of a weak story if it is, isn't it?
But yeah, across the board, Fresnel obviously down 1%, still feeling the pain of silver being a touch weaker.
Which one, Phil?
B&M.
B&M still in auction. That's why.
That's going to be fun.
B&M, I'm not sure there's a read-through to Tesco from B&M. Come on.
Markets need a reason for an opening drop, I suppose. But
yeah. Marks and Spencers had got back to £4. I hadn't realised that. That caught me unawares.
clawing their way back again, really.
Yeah, so that cyber attack that knocked them down below 350 has been completely forgotten about.
This isn't any rally, it's an M&S rally. So there we go.
Where is Whitbread? Whitbread up. Yeah. Oh, that's a tight spread there. Could really do with
M&S, of course, setting those record highs, isn't it? No, sorry, not record highs, but multi-decade highs or whatever it is.
I'm going to put an order in to buy at £29, 500 shares of Whitbread. So there we go, 500 to buy at £29. Get that in because it's a bit of a wide spread at the moment. Not paying 8p IG. Come on, tighten up your spreads in Whitbread. It's disgraceful to drive a bus through that.
I had anyone that says that sometimes.
Right.
Old-fashioned phrase.
Let's have a look in Europe then. We didn't cover. My goodness, right. I bet you've got a bottle of Creed at home, don't you?
Bottle of what?
Creed. Creed Aventus. It's the fancy aftershave.
No.
Oh, Chris.
No, I have the old-fashioned one. I have the really old-fashioned cologne.
Oh, Old Spice?
No. Oh, Spice. Wash your mouth out. No.
So, Kering has sold its beauty business to L'Oreal, and this includes Creed Aventus perfume. It includes the licenses for some of their obviously big names such as Valentino, Bottega, and Balenciaga. Those are now going across to L'Oreal, but Kering's got €4 billion in return.
Smells like a good deal.
It's a beautiful deal. And that'll go to paying down their debt. Their debt's around about 9 billion euros. It was a little bit of a concern there, obviously, with the slowdown in Gucci as well. Gucci perfume will go to Kering in 2027. So a good deal. But when you hear that they actually purchased Creed Aventus for over 3 billion euros.
When did they buy that?
Only 3 years ago.
3 years ago.
So this, I'm telling you, this aftershave though, oh Chris, if you have Creed Aventus on, it stops people in the street.
For a good reason, or do they just fall over because you?
Well, it depends how
it?
much you put on. So I had a bottle of this back in 2016, and of course I would go to work. My housemate worked for BNP Paribas, but he was on the derivatives desk, so he didn't have to be in as early as I did. So he would sneak into my room after I'd left in the morning, go and put on my Creed Aventus. And it was only after a year and a half of living together that he admitted that he was doing it every morning. And that's how it went down so quickly. So as a leaving present, he bought me a spare bottle. So yeah, Keane Fitzgerald, thanks very much for that.
That's when you started weeing in the bottle.
Well, yeah, I should have, yeah, whatever his...
But, yeah, no, I'm not going to wear Trumper cologne.
But yeah, Creed Aventus, at that point, it was £100 a bottle. It's now £280 a bottle.
So you should have bought stacks of it. B&M open.
B&M is open, right? So a profit warning of around about 20%.
I suppose if you're expecting a profit hit of about 30 to 40 million, that is rather commensurate with where you'd expect it to be. Look at that opening gap. Oh no.
There we go. Oh no. Right, 177. Now, where? Oh my goodness me. Right, let's...
£6.50 in 2021.
Shall I bring that in?
That is what they call a dog. There we go.
I don't know.
I think
people were so positive on this thing. Can everybody see where it's trading there? I know it's going to be low on that screen, but it's way down here. When did it last trade down here? Has it ever? Shall we do on to a weekly? Let's go on to a weekly chart. No.
Never? When did it list? Yeah, it's never been down here. And that, of course, is crucial because it's knocked you through those lows from 2014 and 2017. So that was your support gone.
I'm sorry, but look at that. Look at the fall already going into it. Is some of this not priced in? The problem is that when you've got an accounting error, people don't, they shoot first and ask questions later.
Yeah.
Understandably,
I think, really. I'm trading at according to Google Finance, it's trading at 5 times current earnings and a dividend yield of 8%. So that's...
Oh, I don't know enough about it.
No.
But...
You're getting an itchy buy finger, aren't you?
I am getting a real buy finger.
You know what happens to bottom pickers, don't you? But yeah, you can't help looking at it and thinking that looks ridiculously cheap. But
so tell me again what the
current yield, the current.
Let's have a look at market cap. I don't know the debt situation. The debt situation always worries me.
Market cap about 1.8 billion. Just looking at Google Finance.
Okay, and it's a profit warning of 40.
Yeah, you call it about. I think it was a 40 in the range. It was one of those with the range, so it's about 40 million pounds.
And so it's wiped off 400 million off the share price.
Yeah.
For a profit warning of 40 million.
Well, because I suppose as we were saying earlier, if you go looking for stuff,
yeah,
you might find it. And so if you've had a system error that delivers that kind of nasty hit, the risk is if you go looking, you might find others, which is maybe why the CFO's had to go.
Yeah. Yeah, I mean,
maybe you can read too much into that, but of course we know, and I don't know if this is the first profit warning or not from B&M.
It's already bounced 4%.
Profit warnings come in threes, don't they? So I don't know where we are with those.
Well, I think that, I mean, by the looks, it's had about 7. But this is meant to be the model. Maybe Andrew McKelvey, do jump in if you have a view here. He just bought some at 177. There you go.
Well, if you're prepared to sit on it and see what happens, it could be a really interesting move. Even if it bounced to those highs from the end of September, that'd be a decent bounce, wouldn't it?
Well, I was more thinking a bounce to sort of £2, £2.05.
Yeah, that's what I mean.
Yeah. Sorry, right. Yeah.
Right up to those, yeah. Before that, there was a gap lower, wasn't it, at the beginning of the month? So there we go. How many gaps? There's about 4 gaps on that chart. That's not a healthy price, actually.
Yeah. Right. Let's put in.
I do like to be Phil
an
Gary.
alert,
That's very true.
because we know that, look, the long funds will puke this today, because as soon as you have an accounting error, they just have to.
Andrew McKelvey says this is the 3rd profit warning. So, on the old rule of profit warnings come in 3s, that has now hit the end of that rule. So if there's another one, it resets. But that is technically...
Right, 1.7. And Andrew paid 1.7. Oh, there's he. IDAROC. Look at IDAROC in at 177 and out at 186. Boom! In 2 minutes. Well done.
Take the rest of the day
Well
off.
done. Nice. Yeah. Okay, so I'm going to go 178. I'm going to put alert in there, just as a little marker. And hopefully that will jump up in my notifications some point in the next hour. Well, that's certainly a chart. That's an interesting chart. But what would you be able to guess that if you saw it in a few weeks' time?
Yeah, probably not. I'll have to keep an eye on that, Ren.
Right, coming up, guess the chart. We are talking. What country are we in? It's a US stock. Ready to guess the chart. Who's going to get it first? Or are you too busy trading B and M? Here it is. We'll see you after the break.
Ready to start, and says slow down, let's guess the chart.
Welcome to Fast Markets. Today we're going to be looking at Whitbread. But first of all, Parky 1977. Good morning, mate. Yeah, cheers for that. Morning, folks. Rich's fantasy league team seems to be heading towards a relegation show. Cheers. Welcome to the show. Time do you call this? Market's been open 15 minutes.
Maybe he works in the social media team.
Yeah, working from home. What do you think the chart is there, people? I think David got it first there. R6N shortly behind. Julian shortly behind that. Nailed it. Netflix. Look at how smooth and unvolatile it's been into... Non-volatile. Into numbers.
Yes.
Really interesting.
Yeah, and then sideways for weeks, isn't it? So it's interesting.
And The Diplomat is... Series 3, The Diplomat's out.
Is it good?
Oh, it's brilliant.
Alison Janney, isn't it? She in it? West Wing fans.
Right, possibly. I never got into West Wing, funnily.
Didn't you?
No.
I didn't the first time. I watched it last year.
Right, Fast Markets, come on, let's go.
Sorry.
That is Netflix, but yes, ahead of numbers this week, there have been some good things. Now, Deutsche Bank had a meeting with Whitbread management last week, right? So we've got some really good steer on their thinking. They thought the move looked like it was overdone, right? That was the whole room looked like they thought the move was overdone on the downside. Remember, Whitbread dropped 11% on that set of numbers they produced. So current trading, London is especially strong. It was 100% capacity last Wednesday. Of the 98,000 rooms they're targeting, right? So they're trying to open 98,000 new rooms. There's only 1,000 rooms they don't have planning permission for already. So that looks like it is got a good chance of going ahead. Germany was cited as part of the weakness. To some extent, they saw it coming, softer demand in Q2. But of course, that lapses the European Football Championships. So that makes a lot of sense. Of course, you would be lower year on year. They've just done a deal for 8 leases on hotels, which will come on next year. So the expansion in Germany is at full tilt. The losses there have been 50 million in 23, 33 million in 24. 11 million last year, and now looking for profitability into next year. So that German business in the growth phase is now coming into profitability. Cost inflation, you're seeing the usual stuff. There's a little bit of a warning there for Wetherspoons, Fullers and Youngs that the net cost inflation sounded potentially negative for them, for the pubs that is. But the inflation's come through in red meat and, of course, national insurance and energy, but they can mitigate the costs. So, yeah, they are... Now, they point to the fact they've done 43 million of cost savings in H1, and they're on course to do a further 250 million of cost savings over the next 5 years. Then Deutsche go on to say, look, it's on 15.5 times 26. It's on 14 times 27. There's a 250 million buyback, which is 5% of the company. But there is a chance that they could go more aggressive if they see opportunities in share price drops.
Okay.
So you got a bit more aggressive, chance of more aggressive buyback in the short term. And so I think this is a good opportunity. I'm looking, it's unfortunately, it's up 20p today, but I'm certainly looking to grow my position there.
It's gone sideways for 5 years, isn't it? It's the problem, really. It's just lost a catalyst. Wasn't this Fast Markets? Was this a Whitbread special?
I thought that is one of the most interesting things in the morning. What stock are you going to talk about, Chris Beach? Come on.
We should do Galliford Try since it's moved on a contract.
Never heard of it.
No.
Something else.
House builders. Up 2% this morning. Look at that. Let's get... Where's Galliford?
Yeah, nobody's ever heard of it.
Nobody's ever heard of it. Nah.
What about your big US stocks? Anything there that you want?
We should talk about Netflix ahead of earnings, shouldn't we? What's going on with Netflix?
Right.
And Tesla. I'm sure they'll be baying for interest on Tesla this week.
Yeah, Netflix. It's a very,
What's the expected move for them? Do we know?
The ads, the ads have really started to come through, and remind me, one of the big companies just advertised for the first time. They've done a deal there, and I see limited downside in this on numbers.
It's expecting to see revenue grow 17% over the year, which would be up from the 15% recorded in the same quarter the last year. So it should be a fairly strong quarter coming through from Netflix. I don't know if you've got the expected move. Have you got that?
Yeah, just getting up my tasty trade.
Let's do that. I'll move on to Tesla numbers this one here.
Right, so numbers are on. So tomorrow after the close.
For Netflix, yeah.
Right, so that means we're looking at. Yeah, we've got a $94 move. Wow. So we're talking 7% expected move.
Chunky. There you go.
I would happily sell a put there down 7%.
It looks a bit.
Maybe I'd chicken out and go down 10. But yeah, I'd fancy selling a put down 10 to buy calls up 5 to up 12. That's the kind of thing I would set up.
Yeah.
On that big of a move.
Bit of a coil spring. Yeah.
Right, gold. What are you doing on gold at the moment, Chris?
I like the fact that the chat are dragging you because they've got no mentioning how much they like Galliford Try. So there you go. That'll teach you, won't it?
Yeah. Who
Turns
moved?
out they're all Galliford Try nerds on the chat. So there you go. Teach you.
Was this called something else? Never heard of it in my life. I only ever traded proper stocks.
Oh, dearie me.
But was it called something else?
It may have been. Maybe something. I don't know.
Right. I saw a very sensible comment in the Wall Street Journal over the weekend. So let's hear your opinion on.
I can't remember what I said. What did I say about it? I said
he's
all I said was
to the Wall Street Journal, and he can't even remember what he said.
That was a long time ago. All I said was the unstoppable rally seems to have hit a speed bump, and this is the thing, isn't it? If you look at that candle, you think, is it going to care? Does it finally care that it's sort of hit an air pocket? Have we got anything more fundamental behind it? That is probably the definition of parabolic move, and as the old saying has it, they don't correct by going sideways, but you might lose a lot of money trying to call that top in gold,
or make a lot of money.
Or you might make a lot of money with it coming down 2%. But if everyone else decides to jump back on board that could be really interesting.
I think it's more the actual technicalities of the market itself at the moment that's really interesting.
In silver.
It's literally a physical shortage, which is bonkers. But do you know where the physical shortage has come from?
No.
It's the ETF providers.
Ah.
You're seeing such huge demand in the ETS for these things which some might call speculation. The ETF providers are having to go into the physical market, buy the physical, and it's just there's not much there.
So that's driving playing a part in that move higher.
But that also means if a central bank somewhere decides just to put a little bit into the market and you start seeing ETFs selling, then this thing collapses. Because then it should never have been up there, and you've got forced sellers. So that's how you get a 10% move down in silver.
Yeah. Which can happen very easily because you are dealing with gold's volatile cousin at this point, or brother. Cousin, brother, doesn't matter. But when gold moves, silver's bound to move even more, I think is the way to look at it. And you wonder how much of that will be a connection with them, maybe with crypto as well. But maybe that gives crypto more of a boost, given it starts to recover.
Yeah, that's the interesting thing, isn't it? I mean, there's not often I would say I'd rather be in Bitcoin than gold, but now is actually one of those times.
Yeah, well, even Power calls it digital gold, so there you go.
Or is somebody else said that, what was it the weekend? So if Bitcoin's digital gold, then if you're going to the safe haven of Bitcoin, what's that? Or gold is now physical Bitcoin.
Physical Bitcoin. You could annoy a lot of people calling you physical Bitcoin. I suspect we should start doing that, really.
Yes, that always hits a mark. Right, B&M, where are we then? They are 190 in volatility on the upside.
Coulda, shoulda, woulda. Gaps do get filled, as producer Phil rightly noted, but Phil says they get filled. There you go, there's a jack there.
Knocking 360 million of market cap off for a 7 million accounting error. Sometimes it's just too obvious.
Always obvious with hindsight. It does seem like a very dramatic reaction. But then if you've got the CFO going, the bad news is all there, isn't it, really, to build on that move? So.
Yeah. Right, it is 8:26, so we've got Imran coming up in the next few minutes. So we're going to go to a break. We're going to relieve Chris of his duties because he has to go and find
half an hour.
A trade of the week in Galliford Try.
No, by B&M. Oh, wait, that was the one we missed. Sorry.
Good stuff. Right, we'll see you in 2 minutes with Imran, my old colleague from Credit Suisse. He's also been round a few other banks, and he certainly knows his way around the banking system. So we're going to talk about what on earth happened last week coming up in 2 minutes. Do you like the sound of tax-free trading? Well, that's exactly what spread betting enables you to do. This tax-free way of trading lets you speculate on the price of over 17,000 financial instruments, like shares, indices, forex, and commodities, without actually owning them. With spread betting, you can benefit from both rising and falling prices, letting you find the perfect opportunity. So if you think the market's going up, you buy. If you think it's going down, then you can sell short. Not only is spread betting exempt from capital gains tax, but it's also commission free. All you pay is the spread. With us, you're not alone. You're part of a wide community of traders that you can learn from. We've got the experts, the tools, and extensive educational resources to help you on your journey. If you're not quite ready to trade with real money, you can always give it a go on a demo account. Open an account today, join the conversation, and be inspired to make moves. Welcome to The Art of Investing, a brand new podcast to help you achieve your investing goals. Join me, Rich McDonald, and my co-hosts Mark Spice Holden and Chris C.J. Fellingham every Friday when we bring you updates from the markets and insights from our combined 100 years of investing experience. If you're looking for flexible ways to trade financial markets, whether you're experienced or new to trading, you've come to the right place. CFDs let you speculate on the price of financial instruments like shares, indices, forex, and commodities without actually owning them. You can benefit from both rising and falling prices across 17,000 markets, letting you find the perfect opportunity. So if you think the market's going up, you buy. If you think it's going to go down, you sell. When trading CFDs, you're trading on leverage. Now, leverage lets you trade bigger positions with less money up front. So this increases your profits on your trades But also remember, your losses are also amplified, so be sure to manage your risk. With us, you're not alone. You're part of a wide community of traders that you can learn from. We've got the experts, the tools, and extensive educational resources to help you on your journey. If you're not quite ready to trade CFDs with real money, you can always give it a go on a demo account. Open an account today, join the conversation, and be inspired to make moves. Do you like the sound of tax-free trading? Well, that's exactly what spread betting enables you to do. This tax-free way of trading lets you speculate on the price of over 17,000 financial instruments, like shares, indices, forex, and commodities, without actually owning them. With spread betting, you can benefit from both rising and falling prices, letting you find the perfect opportunity. So if you think the market's going up, you buy. If you think it's going down, then you can sell short. Not only is spread betting exempt from capital gains tax, but it's also commission free. All you pay is the spread. With us, you're not alone. You're part of a wide community of traders that you can learn from. We've got the experts, the tools, and extensive educational resources to help you on your journey. If you're not quite ready to trade with real money, you can always give it a go on a demo account. Open an account today, join the conversation, and be inspired to make moves. Welcome to the Art of Investing, a brand new podcast to help you achieve your investing goals. Join me, Rich McDonald, and my co-hosts, Mark Spice Holden and Chris CJ Fellingham, every Friday when we bring you updates from the markets and insights from our combined 100 years of investing experience. Hello, welcome back. We're here with the one, the only, Imran Lakha. We've just been talking surnames. Imran and I used to work together at Credit Suisse, and then you went onwards and upwards into the American banks, the safe ones.
Yeah, the ones that survived.
Yeah.
Although just about survived. I was at Merrill, remember?
So that was, you were at Merrill's in 08.
In 08, yeah. And we, it was when Lehman was about to go, and Merrill would have gone if Lehman's went as well. But Merrill got taken out by Bank of America, and we got, it's funny, we got saved. But the irony was, all the people who were at Lehman's, they kind of got saved as well, because Nomura came in and bought all the banking part of
It was a recruiter's dream, wasn't it?
It was unbelievable.
And then Barclays, half of them went to Barclays, and well, over half went to Nomura, I guess.
Yeah.
But what was it like when that announcement came out on the Sunday night that Bank of America were buying Merrill Lynch?
Well, yeah, it was a relief, right? Because you didn't know what was going to happen.
Was it a surprise?
Yeah, I mean, they kept it fairly quiet in terms of, like, everyone on the floor didn't know. Right. It was a fairly, I mean, you would have had to be very senior to, like, know what was going on.
Yeah.
Right. Wasn't quite that senior at the time.
It was, I mean, it was certainly a frantic weekend, wasn't it? And so I was speaking to a friend, and they were annoyed. Didn't stop them going out to Kensington Roof Gardens on Saturday night, but they were annoyed that they were having to work all weekend to get all their exposures.
Yeah.
And so this morning, the investment banks, they're going in reporting all their exposures to the big bosses because of this regional bank turmoil. The small panic in regional banks.
Yeah, so like the regional bank sector in the US was down like 6% in a day, which is quite a chunky move.
Yeah.
and credit concerns coming back and stuff. But the thing is, we've seen so many of these little credit blow-ups now since '08, and the authorities are so fast to plug the holes now. So it's quite hard for it to turn into anything too sinister, I think.
Definitely.
Yeah.
But then you do have stocks such as Barclays up 33% this year, Standard Chartered up 40%, BNP up 20%. So they have had big moves, albeit they've got perfect conditions with interest rates.
Yeah, and the big banks are somewhat insulated, right? It's really the regional banks which you're a bit more concerned about.
Yeah.
That they've got skeletons in their closet kind of thing. But the too big to fail type banks, I think, are fine, right? Like the big US banks did well as well in earnings last week.
Although Jamie Dimon clearly peeved that he ended up taking $150 million hit in one of these things, But yeah, so we've seen this before. We've both experienced it. It doesn't feel like there's a subprime-esque problem, but that's not necessarily going to be needed just to take the S&P. Are you surprised the S&P's as high as it is?
I mean, when you're driven by rates and liquidity, like we have been for so long, we are cutting rates at a time where inflation is not low, right? So it's kind of, they're just running it hot and asset prices are reacting basically, right? So, I think I would be more surprised probably to see 6,000 on the S&P than I would to see 7,000 by the end of the year, right? Because we are in that world, right? Like they are, they should be probably more prudent about inflation, but they don't seem to care that much because there's so much pressure coming from Trump to bring rates down. He's bringing all his people into the Fed as well, right? And now you had Powell, right, talking about it last week about balance sheet, slowing the pace of balance sheet reduction, which was effectively dovish, right?
Well, I assume that's because they'd already told him.
Yeah.
The regional banks had already had to tell the Fed what they were about to announce.
Yeah. But again, that's a dovish comment, right? So it's kind of, whilst rates and liquidity are supportive of the market, it's hard for the bears.
Yeah.
Very hard for the bears. That's not to say you won't get these little corrections, but they're just flash in the pan type moves that literally they last a couple of days. And if you don't monetize all your protection, it's gone, right?
But that can be very, it pays off well, doesn't it? The chance to monetize that because we're at the levels that we're at, because vol was so low, you can get a bit of an explosion. Oh,
for sure. I mean, when volatility gets cheap, options give you great leverage, right? And when you time it well, I mean, we had a 3% down day, which we hadn't seen in how many months, right?
Yeah.
So it's the biggest drop on the S&P on that Friday when Trump came in with his tariffs again, right? Finally, the market cared again, and the leverage you got on any S&P protection was amazing, but you 2 days later, the market was back at 6,700, right? So
it's crushed again.
Yeah, so it's kind of, you've got to be pretty fast to trade that, and the market's kind of figured that out as well, which is why the vol is quite high, right? It does pop a lot. VIX got to 29 last week.
Explain to people what the vol is.
Just how much volatility itself moves, basically, right?
Yeah.
So if you look at, there's a measure called the VVIX. So everyone knows what the VIX is, right? Which is the S&P volatility, effectively, right? And that got as high as 29 last week on this regional bank wobble. But by Friday, it was back to 20 pretty much, which is a pretty big swing from 29 back to 20.
Yeah.
But the thing that kind of reflects that volatility is the VVIX. And the VVIX is up at something like 120, which is pretty high, right?
Wow.
So it gets maybe as low as 80, the VVIX.
Okay.
But right now it's about 120, which is pretty pumped.
I was warned off. Actually, probably when you were still at Credit Suisse, I was warned off trading vol of vol. That was the sort of widowmaker,
Well, I think the widowmaker is being short a load of vol, right?
Yeah.
Because the amount you can blow up on that is quite spectacular, right? So selling calls on VIX, for example, right?
Yeah.
As a retail trader, you'll look at calls on VIX and think they're super expensive, right? But that is how you blow up your account, basically, right? So there's not just retail, there's loads of hedge fund traders over the years who've thought they were smart selling really expensive VIX upside, And yeah, whilst nothing happens, it earns you amazing time decay and it works really well.
Yeah.
But you know what? Once in a blue moon, when it goes, it wipes you out. So it's not something I would ever recommend doing.
One of the recipients of running the economy hot has been gold, hasn't it?
Oh my gosh, yeah.
Go on, take us through.
I mean, gold is a sort of asset that normally moves about 10, 15% a year, right? This year it's up, what, 50-ish? Yeah, that's spectacular. A 3 sigma move on a long-term basis like that. All these long-term RSIs and stuff were in the 90 region. This thing, when it broke out of that range, it was in a range for about 6 months, right? When it broke out that range, it took out 3,500. It just flew. And I mean, it surprised me. I was waiting for that break, and I jumped on that break, but I got out at I started getting out at 3,800 because I was like, once it breaks that range, the measured move to 3,800 was the obvious target. And then 2 weeks later, it's at 43. You're like, what the hell? So it's gone a bit nuts. I do think it's overreacted, but you know, it's been a combination of China buying relentlessly. People have been talking about that's the real bid that just doesn't seem to care or what the price is.
Yeah.
It's turned into a momentum trade now as well, right? So all retail have stepped in buying ETFs and
I think
stuff.
that's what it is. That's the second kind of leg up that it's had is
Yeah, momentum chasers, for sure. Right. Yeah. So whereas AI stocks were the momentum trade, now it's gold and silver, right? So there will be a point though when that momentum trade kind of unwinds and it rotates to something else.
Yeah.
Right. But
what do you think it'll take for that to happen in gold? What stops this this craziness?
It's a good question, right? I mean, is there a point where China just take the foot off the gas a little bit? I mean, I think you kind of need that really, because if they're the main driver, but you might get a short-term correction, like from a bit of a momentum unwind, right? Where a lot of retail types have bought it thinking it only goes up and then they get stopped out, right? But there will probably then be a load of demand that comes back in from the likes of China and from whoever else is accumulating, because it's a de-dollarization trade essentially, right? It's like,
well, that's what I wanted to get into.
So it's like when Ukraine-Russia kicked off a few years ago, and Russia's kind of treasuries got seized, the entire world looked at that and said, okay, we're all parked in treasuries in our dollar reserves, and these guys can just like seize them. We need to be rotating into something that doesn't get seized, right? That we can hold away from the US. So gold became that alternative, right? So
and that was China's real kind of wake-up moment. And
yeah, so everyone, so see, a lot of central banks have started kind of moving away from treasuries and into the dollar. And then on top of that, so not only central banks doing that, which it made sense, but then investors, smart investors, macro investors realized that kind of the policy mix was not great for bonds, right? And so it made sense to rotate out of bonds and into precious metals as well from an asset allocation perspective as well. Yeah. And that has been picking up steam as well in the whole asset class, in the whole asset management
Let's
industry.
have a look at the 6 months then. This is the iShares gold ETF. And you can see there right from the Fed indicating that, you know, rate cuts were coming back in August. Then that's been it. So Jackson Hole that sent us into overdrive. Mm-hmm. But nobody expected that
parabola.
Yeah,
it is quite crazy just how steep that is. But you know, if you've been long it, congratulations. But I think you'd be mad not to be putting some hedges in place now, right? You know, because like how, you know, you probably didn't allocate whatever percentage of your portfolio into gold thinking it's going to be up 50% this year.
Exactly.
So you kind of need to just be a bit like prudent and say, I've made way more than I would normally make on this allocation. Mm-hmm. I either need to dial it down a bit or I need to put some hedges around it, right?
And you are the hedging expert, of course. So Imran, let's just show everybody here. So Imran, his business is called Options Insight. He first taught me about options back in 2005. So yeah, certainly well placed.
2005. My God, that shows how old we are.
Does, doesn't it?
Yeah.
And yeah, so we see here the Alpha Pod. What's the Alpha Pod?
So that's our community, right? So basically, it's a global community. So people from all over the world join it, and they get access to my Discord server. So, you know, that's where we have lots of channels talking about lots of different things. And what I'm essentially doing is trying to teach people how to trade options like a professional. And so what I do is I break down the trading strategies that I employ myself with my own money into different categories. So directional trades, those are called delta trades.
You can take that down now. Show Imran in his full glory there with the stash on.
Yeah, I look a bit different from the picture now. But yeah, so we have directional trades. So when you're trying to get leverage to a directional view, you can use options to do it, and you can use various option structures to do that, depending on where the vol is and where the surface is and what is optimal. Then you've got theta trades, which are income generation trades, so like call overwriting that I'm sure we've talked about before. And there's like funky stuff that you can do, like if you think the market's going to be range bound, you can do iron flies, iron condors to make money from a range bound market. So those are very popular, especially in the retail zero DTE space right now.
Oh my goodness.
Then we've got Vega trades, which are volatility directional trades. So if I've got a view on the VIX, for example, how do I express that? And you know, using options usually on the VIX, so vol like we discussed, but in a safe way. And then finally hedging, which is a big one, right? I mean, that's the reason options were invented in the first place, was for hedging purposes, right? So
it wasn't for punting zero TT all in.
No, the world's moved on, but originally it was for hedging. But you know, the idea is showing people, like, you know, how you can hedge your core holdings, like gold, for example. Gold has rallied so much. You might not want to sell it because you're like, why am I going to sell this? It's working, you know, but it's hard to not think there's going to be some kind of pullback in the next couple of months, given how overbought it is, right? So what you can do is you can sell upside calls, maybe 4,800 calls or something, and you can buy a put with the same premium that you receive.
Let's look at the IG option stream on gold then. So how far out would you go then?
Probably 2 months, right? So December.
Okay, so
I mean, that one actually expires 24th of November. That's only a month, right?
Yeah.
So maybe go a bit further out just to get a bit more juice out of those calls.
Okay.
And then where are we trading? We're trading, I don't know where the future is for that particular expiry.
It is 4312.
That's where the future is, yeah?
Yeah.
Okay. So then, you know, push it a bit further out. So like, what do you get for that 4,800 call?
65.
Yeah, so you're getting about 1.5%-ish for that, okay?
Okay.
Right? And then what put can you buy for that same premium?
You can buy a 3950, 3,950.
And see where the vol is on that. The vol's 20...
22 and a half?
And what's the vol on the call?
24.
Exactly. So in gold, you have upside skew, right? Which you don't have in equities, right? In equities, you always have downside skew. So the put vol's higher than the call vol. And so when you need to hedge your equity exposure, you're kind of paying up for that a little bit, right? The beauty about hedging your gold exposure is you're not paying up. They're giving you some edge because they're paying up for those upsides because of that explosiveness that it can have on the upside. But once the move's already happened, you're kind of like, you're getting a really decent benefit for that, right? So that's a nice way to protect the exposure, basically. Now, you could do a bit more funky stuff that, you know, like put spread collars, where you don't buy a put, but you buy a put spread instead.
Okay. So yeah, take us a bit closer to the money on the downside.
Exactly. So instead of buying that 39.50 for 60 ticks, you know, maybe you buy the 4,200, right, for 150, and then you sell something lower down. Maybe you sell the 4,000 against it. So that's only costing you 75, right?
Yeah.
So you're so it's pretty much spending close to zero, and you've got protection down to 4,000 out to Jan, right? And, you know, if nothing happens, you didn't really spend anything, right? If the market keeps rallying, you've made peace with the idea that you're going to get taken out of some exposure at 4,800, which is another 10 plus 12% away, right? And then you're looking at like a 62% return on the year, assuming we're up 50 already. And if you get the pullback, then you can monetize your protection. So you don't have to sit there and wait till expiry. Once this thing gives you some money because you get a pullback, you can just unwind it and take whatever you made, basically.
And that's literally about a 7% pullback, which is exactly what we're talking about. You know, it would make sense. I don't think anybody would be surprised if gold was down 7% over 3 days in the coming weeks.
Yeah, and the beauty of a put spread collar structure, that's what that's called, is that it's a short vol structure, right? Yeah. So if vol goes lower, because vol has doubled in this move, right? Vol's gone from like 15 to 30 pretty much. So if vol pulls back to 25, you actually benefit because the price of this structure will go up, right? Yeah.
Awesome. So that's on gold. What else are you looking at the moment? That's jumping out to you on the option side.
What have I got on right now? I mean, apart from I've been hedging a bit of my semi exposure. I've got positions in Intel and Taiwan semi and stuff like that. So
Intel
I've been
reporting this week as well.
yeah. So I've been doing some risk reversals on those as well. And then just in terms of
So let's look into Intel there, because it is one that we look at quite often on the show. So there is the daily, and of course this is really interesting vol-wise because it had the big drop last year, and of course now we've seen everybody and their uncle taking a potential stake in the company.
yeah, exactly.
So they've got no liquidity issues anymore. So what do you do if you see it up at 37?
Well, I mean, I was buying it when it started to try and break that range to the top side at like 20, what's that level?
26 to 28?
Yeah, so I was buying it around 26, 27, right? And it was like so many false breaks, but I held on to it because I didn't buy options, I just bought Delta One, right? Just shares. Now that it's popped this much, I'm kind of like, okay, I don't really want to sell my shares, but again, I'll do the same thing. I'll protect them. So I think I bought like the 33 put and financed it with some 45 call or something like that, basically.
Right, okay.
Yeah, so I've got that to November expiry. So if it does have a pullback over earnings, then great. If it takes me out at 45, don't really care because I bought it at 27.
That's the last thing you care about.
You know what I mean? If you bought it at 27 and it takes you out at 45, I think you'll take it, right? So that's quite a nice trade. But it's like the onshoring trade, isn't it? It's like Trump wants to onshore manufacturing of semis.
Yeah.
And so they're going to be supported by the government in some way, shape or form, right? So you probably would buy pullbacks, but I just think buying it up here, I probably wouldn't chase it up here.
And what about TSMC then? Are you thinking more that they suffer from?
Maybe. I mean, I think you saw the price action after earnings last week, right? They had record earnings again, and it kind of opened up and only traded down from there, right?
Yeah.
So when you see bad price action on good news, it makes you wonder, is this thing a bit toppy now, right?
It's certainly, I mean it.
Yeah, I mean, I think I've had it for
any
like
scenario.
200% basically on my shares on that thing, right? So it's kind of like, again, I don't want to sell something that's up 200% because it's like a long-term hold and a theme that's been in the book.
Yeah.
But at some point, you got to say, okay, price action stinks on earnings. Let me put a hedge in place. So I've got December risk reversal on that one in case this thing wants to roll over a bit.
And risk reversal
Is that
basically what
still
we've been
call buy
talking about.
put? Exactly. Yeah. So those are the hedges that I've got in place. And then in terms of longs that I kind of have put on using options recently, like the delta trades that I was talking about, I've got some longs in the cannabis sector.
Oh, right. Oh,
Yeah.
that's a new one for us. I don't think we've ever covered the
Because it looks like the Trump administration's going kind of hell for leather on trying to push that and like deregulate that basically. And it's actually been in a long-term downtrend, but it's showing signs of an uptick, right?
And then, so this is just an index that IG put together.
Oh, okay.
So the cannabis index.
Yeah.
But do you go single stocks or do you go on any?
No, I just stick with the ETFs. I did some ETF call options,
Right.
sort of medium-term ones, right? And the solar sector as well is quite interesting.
Right.
Because the idea, and these are longer-term trades, so they might take months, if not years, to play out, right? So you kind of don't want to go too short-dated with those options, right?
Okay.
But if you zoom out a bit, so you can see a much longer-term chart, that's been even longer, right? How far back does
Way
that go?
back. Well,
Okay, that's pretty good. Yeah.
Go to weekly.
Yeah. So the idea here is that this sector, that's First Solar. I've gone for the ETF.
Ah, right. That's
For
why
the
it looks
tan,
different. Right.
for the TAN ETF, yeah. But the idea just being that all of this AI energy
Tan,
demand.
as in get a suntan.
Yeah, exactly. Yeah.
That's brilliant. These are genius. I wish my job was coming up with ETF names.
I do love some of those names. They are hilarious.
Yeah.
But the idea being, if this AI revolution or whatever you want to call it needs a ridiculous amount of power to drive it, right? And China have been dedicating a lot towards building out their solar energy, right? So everyone's kind of going to follow suit, right?
Yeah.
To build that out. So, because everyone's going crazy for nuclear, but how long does it take to get a nuclear reactor online, right?
3 years at least.
10 years probably, right?
I think, well, the mini ones.
Oh, maybe the mini ones, yeah. But that's the point. So there's going to be a need for more solar in the energy mix.
Yeah.
And so, you know, Trump, when he first got in, he was like anti-alternatives, right? Anti-renewables. But there'll be a point where there's this big U-turn on solar because they'll realize that they have to have a lot of solar in the mix, basically.
Yeah.
Right.
So this has it's just starting to show some life, isn't it? After
Exactly. Yeah.
sort of a few months of not doing much. Okay.
So you know, for the longer term call options, you want to look for things that have been in the doldrums for a long time, but are now starting to come alive, right? They're starting to turn. The vol's not crazy expensive, right? On the cannabis sector, vol's expensive because that thing can do 20% in a day easily on a piece of news. But in the solar sector, vol's in the 30s, right?
Okay.
So that's really quite cheap if you think of it on a long-term basis. If you think the sector could 3 to 5x over the next year or 2 years or something,
Wow.
then a 30 volt doesn't feel too bad, right?
Right, we've got the US pre-market section in a few minutes' time. So I think we'll go to a break. Imran, do you mind staying around for US Open?
Sure.
Not 2:30, don't worry.
Yeah.
So 2 minutes, and we'll be back with you, and we'll go through some of the US stocks as they're showing that continued strength this morning after a rally on Friday. We'll be back in 2. Do you like the sound of tax-free trading? Well, that's exactly what spread betting enables you to do. This tax-free way of trading lets you speculate on the price of over 17,000 financial instruments, like shares, indices, forex, and commodities, without actually owning them. With spread betting, you can benefit from both rising and falling prices, letting you find the perfect opportunity. So if you think the market's going up, you buy. If you think it's going down, then you can sell short. Not only is spread betting exempt from capital gains tax, but it's also commission free. All you pay is the spread. With us, you're not alone. You're part of a wide community of traders that you can learn from. We've got the experts, the tools, and extensive educational resources to help you on your journey. If you're not quite ready to trade with real money, you can always give it a go on a demo account. Open an account today, join the conversation, and be inspired to make moves. Welcome to The Art of Investing, a brand new podcast to help you achieve your investing goals. Join me, Rich McDonald, and my co-hosts, Mark Spice Holden and Chris CJ Fellingham, every Friday when we bring you updates from the markets and insights from our combined 100 years of investing experience.
Around on that.
How are we doing? We're back. We're ready for the open. We've probably just got 30 seconds. We're going to get you ringing the bell, Imran.
Hold on in.
30 seconds time. So we're going to have a look at earnings, what's coming up this week, if there's any plays into earnings, of course, Netflix and Tesla. But first of all, we're going to look at the oil sessions and just see after, of course, that big move over the last few days. Not yet, not yet. Not yet, Tom. Get it packed down. Go on. Wait for 9 a.m. Wait for that bell to ring. And yeah, we'll see if how the recovery is going on this morning, including TSMC and Intel that we have just looked at. Go on. Bet you never thought you'd be ringing the opening bell, eh?
No, it's exciting. It's a highlight.
Right, so off and running they are. Imran, take us through what's some movers and shakers.
All right, what we got? 1.5% rallies out of a lot of these names. Big tech's going to be interesting this week. Like you said, Intel's got earnings, Tesla, Netflix, etc. Tesla is still pretty close to the top end of the range, right? At 440, 450.
Yeah.
I don't know. I struggle to see how Tesla earnings is going to be that bullish.
It can't be, right?
Yeah, I do struggle because, you know, they always rally on optimism, but they never really deliver on the numbers, right? So again, I mean, it might well be that earnings disappoint, we have a little pullback, and then it gets bought again. That's what typically happens, right? So I've been looking at some trades potentially on the option side on Tesla.
Okay, so let's have a look at Tesla options then for the week. Here we go. Right, so we got a daily one. We're now doing daily single stock options
Oh, really?
on the Max 7.
Oh, wow. Okay.
Hey, there's some fun for you to have.
Not my typical. It's not my typical instrument of choice.
Yes. Right. Excuse me. The options then. So this is the Friday expiry. So this is what we've got.
Yeah. Okay. So that captures the earnings, right?
Yeah.
Yeah. Exactly. But then have you got the one that expires the week after?
No. Then it goes out to November.
Ah. Okay.
Yeah. So I can get Tasty up if you want to look at that one. If we just take the chart up a second, please, guys. Thank you. Let me put my
So the way my playbook usually for earnings is to try. Right, the thing about options is that they help you pinpoint what the implied move is for a name on earnings.
Yeah,
right.
okay.
So like options volatility normally trades at a premium going into earnings. The reason being the market expects a jump on earnings, right?
Yeah.
So by looking at the different volatilities between different expiries, you can imply what the move is, right? So I think the implied move for Tesla is somewhere like 6-7%.
Okay, let's get it back up. Right, so we got the weekly this week is expected a $34 move, and then the week later, $43. So that's 10%. That would be, isn't it, for the week later?
Yeah. So, but for this week is about 7%, right? Ish. Yeah. Exactly. So a 7% move on Tesla will get us back down to 400, basically.
Yeah.
Right. So normally you kind of want to target something. It's sensible to target something in that implied move type area, right? Because the market's kind of telling you what it thinks is going to happen, right? Now, that doesn't mean that will always happen, but it's a good kind of starting point for your, okay, if we get a down move, well, we probably get about a 7% down move, okay? Maybe it overshoots, maybe not, right? So if you thought we were going down to 400, what is the 400 put expiring this week?
410 to 415, sir.
Okay, so now the problem with that is you buy that and we go to 400, you make no money, right?
Correct.
So, right, and you're spending $4 for it. So,
and that's what these retail guys in the US are doing. They're just writing off premium, aren't they? Because they don't understand that the vol is already priced in for a reasonably big move.
yeah, I mean, look, the point is, if it knee jerks lower to 400, you might have a small window of opportunity to slam it out the door and make some money out of it, right?
Yeah.
But look at the vol on it; it's 91.
Yeah.
Right? Where's it going? Probably 40. Right? That's a 50 vol point drop that you're going to face, even if you're right, basically, right?
And that's the crush.
Yeah. So there's ways to structure options trades that don't kill you on that vol crush and express a bearish view.
Okay.
So there's two key ways to do it, right? So if you wanted to stick with the view just being this Friday, by this Friday, you could do what we call a put butterfly.
Ooh.
Right? Where you buy one put, you sell two puts, and you buy another put behind it, right? So it's a three-legged structure. So let's say your target was 400. That's actually the option you're going to sell two of. Sell two of those puts.
Right, let me just clear that then. Clear selling two 400s.
Yeah.
Quantity 2, yep.
Yeah, and then we're going to buy something in front of it. So we're going to buy the 420.
Buying one of the 420. Okay, boom. Let me just try and so quantity down. Yep, cool.
And then buy something behind it. So we're buying one of the 420s, selling two of the 400s. Now, if you want to do a symmetrical fly, you'd buy the 380. The only problem with buying the symmetrical fly is if the thing just gaps down hard, you'll make no money.
Yeah.
Right? Which is annoying, right? So you don't really want to do that. So maybe let's buy the 385, right?
Got you.
And then what's the cost of that?
284. So the whole thing as a total cost $3.
$3, there you go.
For $20 of up.
So now if we smash through, the thing's worth $5, so you still make $2, right? Which is about 60% profit on your premium, right? And if the thing goes to the sweet spot, $20, right? For a $3 spend, you make 17 profit, which is nearly 6 times your money, right? Now, the beauty of this is when the vol gets slammed, you lose nothing off the vol, right? Yeah.
Because you're benefiting from that. Being
Yeah,
sort of
because
that 400.
because you're long that close to the money and you're short vol on this trade basically. So so you actually want a move down and you want the vol to get crushed. That's where you'll actually make your money, and you probably make 200-300% return on premium if we head into your sweet spot.
Let's go bigger. Let's say that the expected move is incorrect and it's underestimating it, and Tesla's numbers are going to be terrible. What play could we have for a Tesla down 18%, but then it does what it always does and it bottoms there and then maybe starts to kind of just slowly go back up towards.
But the down 18, does that happen while the market's open?
Yes.
Yeah, then you just go for a straight put or put spread. Because like that $4 put, if we go down 18%, where does the stock go? Where does that take the stock?
So it's 70, it's about 360, is it?
Okay, so that's still a 10-to-1 payout on a $4 put, right? If you buy the $4 put, it goes $40 in the money. That's 10-to-1.
Yeah.
So that's the thing. If you think if you've got a strong view that the implied move is wrong, and the implied move is too low, then buying options is okay, right? But if you're wrong on that view, you're going to lose all your premium.
Yeah.
Right? So you really need to have very high conviction for that sort of trade, right? Whereas my trade is more of a, I think Tesla's going to go lower.
Yeah.
The market's telling me it should go down to about 400 if it's a miss, and the vol's expensive. So why don't I give myself a cheeky free option on 6-to-1 if it goes there, right? So it's a lower conviction trade, but it could do very well, right? And it will only lose me $3 if I'm wrong.
Yeah.
Right?
Netflix, very different story in good old Netflix. But yeah, let's just have a quick check there.
Yeah, I haven't really looked at the chart for a while. Where's the stock right now?
So 12:05. It was our chart of the day today. We have a chart of the day, Imran,
All right.
which you'll have to start playing along and see if we can get your wisdom on spotting the charts. But so here we go. So there's your Netflix over the past sort of 12 to 18 months. Very steady recently.
Yeah.
Just got The Diplomat Series 3 out. I watched a couple of episodes of those over the weekend. So
I mean, that looks like a classic pullback in a really strong uptrend, ready to go again, right?
okay.
I'd say just from looking at that chart. I mean, we could have one more down leg to that 1100 area to complete the correction, but in an uptrend that's so kind of consistent like that,
Yeah.
and you see those pullbacks are just these ABC type corrections, and we've done an A, maybe we've done a B, and maybe this is the C, but it needs a final little thrust lower.
Right.
So if we get the thrust lower before earnings, then you'd want to be buying before earnings.
Yeah.
But if it's kind of still here, then maybe you just kind of let earnings play out and hope that earnings is a downtick and use that downtick to buy it, right? That's what I'm just saying. Look at purely at the chart.
It does look like you could quite easily, sort of see it around those highs, doesn't it?
And you could see, how we talked about a put fly to play a down move in Tesla. You could probably set up a call fly to target the highs on Netflix, and you'd get similar sort of risk reward.
Yeah. Nice. Excellent. Imran, thank you very much for coming in. Off to Miami soon, I hear.
Yeah, you're going to go meet some of my US members, actually.
Right.
Yeah, so that'll be fun. We have a lot of people in the US because options is a big thing, retail options traders in the
Yeah,
US.
huge, isn't it? Yeah, it just never really took off in the UK, has it?
That's what me and you have to change, Rich.
We're trying. Awesome, mate. Thanks very much for coming in. We got the trade of the week coming up with Chris Beecham after this. Oh, sorry. Do we have one question there? I know that's for technically speaking. Got you. Right. Good stuff. Cheers. Thanks, Hides.
Cheers.
Do you like the sound of tax-free trading? Well, that's exactly what spread betting enables you to do. This tax-free way of trading lets you speculate on the price of over 17,000 financial instruments, like shares, indices, forex, and commodities, without actually owning them. With spread betting, you can benefit from both rising and falling prices, letting you find the perfect opportunity. So if you think the market's going up, you buy. If you think it's going down, then you can sell short. Not only is spread betting exempt from capital gains tax, but it's also commission free. All you pay is the spread. With us, you're not alone. You're part of a wide community of traders that you can learn from. We've got the experts, the tools, and extensive educational resources to help you on your journey. If you're not quite ready to trade with real money, you can always give it a go on a demo account. Open an account today, join the conversation, and be inspired to make moves. Welcome to The Art of Investing, a brand new podcast to help you achieve your investing goals. Join me, Rich McDonald, and my co-hosts, Mark Spice Holden and Chris CJ Fellingham, every Friday when we bring you updates from the markets and insights from our combined 100 years of investing experience. If you're looking for flexible ways to trade financial markets, whether you're experienced or new to trading, you've come to the right place. CFDs let you speculate on the price of financial instruments like shares, indices, forex, and commodities without actually owning them. You can benefit from both rising and falling prices across 17,000 markets, letting you find the perfect opportunity. So if you think the market's going up, you buy. If you think it's going to go down, you sell. When trading CFDs, you're trading on leverage. Now, leverage lets you trade bigger positions with less money up front. So this increases your profits on your trades, but also remember your losses are also amplified. So be sure to manage your risk. With us, you're not alone. You're part of a wide community of traders that you can learn from. We've got the experts, the tools, and extensive educational resources to help you on your journey. If you're not quite ready to trade CFDs with real money, you can always give it a go on a demo account. Open an account today, join the conversation, and be inspired to make moves.
Hello and welcome to Trade of the Week for the week beginning Monday the 20th of October. So I had to check what the date was there for a second. It's me, Chris Beecham. Axel is off in Japan, having a nice, well-deserved break this week. So you get me instead. So yeah, we're going to go short Japan because the Nikkei's just crossed to a new record high at 49,000. Those two events may or may not be connected. But before we go on to this week's trade, let's go back to last week. Short natural gas from Axel, and it always pains me to do this, but he didn't quite work out. He had his stop at 35.70, I think it was. And as you can see, natural gas, there's that gap higher this morning. He had the rebound on Friday as Well, I think a lot of the sort of panic around markets really began to ease. You had a week of panic, really, which was very interesting in terms of sentiment. And then natural gas, sharp recovery on Friday, and indeed has just gone completely mad in opening trading. I think it's probably the technical term for it. This morning up 5% for natural gas and showing no sign of slowing down either. So that puts us back on course to target these early October highs at 3,800. Crucially, that also puts us above that July high at 3,650. And for fans of higher highs and higher lows, that's what you've got forming here off the back of that if this one continues, as it certainly looks like you've got a higher low in place here after the one in late September. So that one, not a great one, it has to be said, but that is the point of trading. They don't always work out. So let's move on to this one for Trade of the Week, for the week beginning, say Monday the 20th of October. We're going to go, here we are, the DAX. Suggestions that I was going to do short Whitbread are wide of the mark, I'm afraid. Let's look at the DAX, because this is an interesting one. Big recovery here since those September lows around 23,400. How's that for an area of support? If we draw a little bit of a box around that one, let's get, where's the rectangle? There it is. Here's your support zone from August and September, dipping into 23,400 and then rallying. You had a big drop, of course, excuse me, over the past week or so. Took us from above 24,600. In fact, is that not quite a record high for the DAX? I think we just did nudge out a record high for the index earlier in October, and then back down again, quite a nasty jump. But it really found the lows on Friday. You can see that long candle there, right the way down to 23,600, a stabilization on Sunday, and then it started to move higher today. So that could be the interesting moment. So we are looking at going long the DAX. This one currently trading at 24,087 with an initial target. We'll assume that we'll see a continuation of this bounce because we're in Q4. Tends to be very strong in terms of seasonality for the DAX. Everyone's favourite topic at the moment. So that puts us on course back to those October highs. The question of the stop has to be said. If we go all the way down to below Friday, so that may well be a bit wide, it has to be said. I think it would be a fair thing to say we've put our stop perhaps around 23,850, which is in the middle of that candle. It might offend some of the purists out there. Axel's hopefully not watching, but I would argue that if you see a reversal back to that level, it arguably invalidates that trade. So if the price does go back down again, be prepared, of course, that we might get some volatility around this. That's why we're running a fairly wide stop. But if we say 23,850, I think that's probably the best thing to look for. Hopefully the guys keep taking a note of that for when I forget. But we're looking to go long the DAX for this week, for Monday the 20th of October, with an initial target around 24,600 and our stop at 23,850. So that's trade of the week. Let's move on now to technically speaking. Don't forget, of course, put your requests in the chat for any particular ones you want to cover. One's got an early gap in, got in early with VRTX. Not one I'm familiar with. Vertex Pharmaceuticals. A good question here. Could you take a look at VRTX, and does the gap up to the 45 level still apply, or has it been in the range too long? I don't think gaps have a time frame on them. I think I understand your point, because sometimes it's sort of slightly invalidated by if you're waiting around forever and ever for a gap. But the key with gaps is they were important before, they can always be important again. Obviously, it doesn't make much sense to go too far back in time. But this one particularly, the gap was only the 4th, between the 4th of August and the 5th of August. I guess that was a profit warning or something. I'm not familiar with the RNS statement on that one, or indeed the notice. So there's your nasty drop down there. We are beginning to get back to this. Interesting, of course, that's your support level from the 14th of May. The low on that one, $41.60, call it $41.70. So there's your support. If you can close back above that, which we actually did on the 8th of October, but couldn't sustain it, notably, but maybe this time around to the charm. If it can do that, that's kind of your first step on the way to closing the gap that goes from there. But it is still one definitely worth watching. And I suppose you have to argue that this rally is still suspect while it remains below that gap down level. So one to watch there, definitely Vertex. Decent recovery. It's interesting, of course, here how it found the low just about a week or so after it really slumped. So there you can see the buyers and sellers doing their work in real time. finally found the low and has started to recover. The fact you've got a slightly higher low there in late September, probably an encouraging sign. So the first step, as I say, get back above that 8 October high, and then we'll see whether it can really go on to close that gap. Could be a bit of a job to do, because as we know, markets always fall much faster than they rise. So one to watch in the short term. Might not be, might be a bit of a of a long-term project on that one. Good. Let's go on to a question from London Guide. We're going to thoughts on Glencore. Let me see if we can. Where's my mouse gone? I'm not used to 2 screens. Sorry. There we go. There we go. And Glencore miners, of course, not a bad start to the day for Glencore. Let's go on and zooming this one out. Decent recovery in progress all the way through. No problem, Gavin. Always good to cover these requests, however esoteric they are. As you can see there, we found, again, this is the great example of stocks that take time to recover. Here was your longer-term downtrend in Glencore, very long-term downtrend in Glencore, nasty performance since the highs of 2023. It's been a tough period for miners, but they seem to have found their mojo over the last couple of weeks. Well, indeed, since the April low, has to be said. But here's your push to your initial higher, just about a higher high, probably falls in that category in July. Nice little pullback, finally finds support, of course, more than once. So the August low, and then we almost retest it in early September. And then you've got the confirmation and the breakout to the upside. So another higher high here. I love it when it does this, because it's really interesting. If you look at this level here, that price level, now that's come into play, slap bang on that September 2024 low, and also close to the 2024 low from February. That's great stuff. That's always what we talk about in charting. The levels that were important before can be important again. In fact, as well, if you, this is good fun actually for charting. Your move in February, when it dropped down, then it tried to recover, couldn't go back above 362. So that is your level to watch, really. At the moment, that is still resistance. And understandably, it's not surprising that the price, after such a strong bounce in September and into October, stumbled at that level for whatever reason. The charters will simply say that is the important level to watch. So until we break back above that, that's your line in the sand, if you like. It would be a healthy sign for this rally from the April lows if you can close above that. The moment is perhaps not surprising that we're seeing it pull back again. Where does it stop? We don't know. But the key thing is that it is still in an uptrend from those April lows, and it seems to have brought this downtrend to an end over the last, the downtrend that's been going on at least since May of 2024 and indeed earlier. So a bit of a reversal here. One to watch, waiting to see if there's a higher low being established, probably somewhere in this area, perhaps around 320, one to keep an eye on, and then it might gird itself up for another attempt to clear this level. But certainly, and unsurprisingly, it couldn't do it on the first bounce. If it had done that and then broken through it, that would be very impressive. But perhaps if you're watching this, definitely want to keep an eye on as it maybe has a continued pullback in the short term. A look at the triple E. Another one we're going to have a look at. Empire Metals. Well, there we go. This is interesting one, of course. I think it had a good set of news come through last week, I think, from people I know that have been following this stock, and that took us back up here. Well, the problem with these smaller cap names is that they're very much a news flow liquidity element, because it can we see quite volatile moves. But there's your nasty, it's opened higher, couldn't sustain it, unsurprisingly, coming back through again, right back down towards 50, and has continued to drop. I apologise for my coughing. 30p, the low from the 16th of September, the one to keep an eye on. Certainly looks in the mood to do that. Now, it is at the moment, today, and of course it's not closed yet, but it is finding a little bit of early support around the 100-day moving average. That may just be coincidence, has to be said. Often you see prices do find support around moving averages, but it's one to work, to keep an eye on, rather than to hang your hat on. Otherwise, you're really looking at this 16th of September low at 30p. That also coincides reasonably well, and not as elegantly perhaps as we'd like it to. Just this area around 30 pence, 30 pence and a half, as it is. Trying to do that in my head is not great. That was your high from the 24th of June. Maybe where the buyers finally step in again. Empire Metals, it's been a hell of a run on this one. consolidation after it getting a bit mad over the past 2 or 3 months, and then it's come right back down again. But there's your line in the sand at the moment, probably. If it can hold 30, then we'll see what it does. If it closes below 30, might be a lookout below moment in the short to medium term, and then you're looking on down towards, I suppose, the 29th of July at 24p, and then below that, the 27th of June, coming on at about 22.95 pence a share. So there we go, Empire Metals. Company that annoys me if you're going to have a small M. I don't know if it's just us or whether it's how they do it themselves. Hims and Hers, they were down on Friday. They were up or down on Friday? I can't remember. Down on Friday. There you go. This one keeps cropping up, and it's not one that we've covered massively. Now there, of course, is your line in the sand on the upside, isn't it? Every time it gets up to this level, it doesn't want to hold on, and it drops back again. As you can see, though, the big support on the downside comes through from these June and August lows around $40. After the size of the drop over the last 2 days on Thursday and Friday, some sign of buying coming through at the $50 mark. So that maybe there's a hope that we get a higher low established here. Perhaps watching for stochastic crossover that might go here, because that was a positive sign the last time around in August. It is essentially a big range trade. Maybe this is now developing a slightly higher low here, which will be a positive sign. And then we're seeing really whether it's got the strength to bounce back towards $67, $68, and then will be really the litmus test. Can it get on through this level? So if you're obviously looking to, thinking about this as a potential trade, you would simply say, well, I'm looking to buy it, for example, here. If you wanted to wait, maybe to move slightly higher in the shorter term, but if you want to do it, buy it here, you'd probably say put your stop below these recent lows. Give it, again, as I always say, some room to breathe. There was support earlier in July around sort of 47.75, so you put it down there. Gives you some protection against volatility, and then you've got reasonable sort of risk to reward of a stop here, but then a target but moving back up in this direction of $67. So that's Hims and Hers. Keeps cropping up, really. It's a very popular name. I'll do more work on them next time. B&M, of course, this morning's shocker. In fact, slightly lower than when we talked about it earlier. If it opened sharply lower, bounced, and then the sellers have come back in again, talking about beating somebody when they're down. This is definitely where you get it with B&M. This is a record low. I think we checked this in the open. It's the lowest level for the stock ever. So we're kind of in uncharted territory, and not in a good way, in the same way that gold is in uncharted territory, because we're at lowest levels. We've never seen this before. We don't really have much in terms of where to work with, really. Because I think if you go back to the one, what was the one we covered? Was it Vertex? Yeah, if we looked at this one as your previous example of a nasty gap down profit warning, I guess that's what it was. It took about a week for it to settle and then find a low. It is possible that the same thing happens here. I think you had the initial slump, you had the initial bounce following that, and then it's going down. It's now down 17% as we're talking. So at the moment, unless you're doing this for a sort of a long-term fundamentals-based trade, and you're simply saying, I think it's worth it now on the valuation of whatever it was, 5.6 times earnings and an 8% yield. At the moment, the price action isn't giving you a level to buy. I think the good buy on a technical basis isn't there yet, because we simply don't know. It might have a terrible session today. It might drop another 10%, because it feels like that kind of market where people are being very, certainly not happy with it, to put it mildly. Obviously, if you get a profit warning, kind of not dressed up as such. It was a guidance on profits rather than saying, oh dear, everything's gone wrong. The 7 million of costs that they've discovered somehow translates into a £40 million hit operating profit. I'll leave the accountants to tell you how that one works out. Obviously, the shares have not liked it. Even worse by the fact that the CFO has left, which raises the risk that once you start digging around, as we said earlier, once you start looking for this stuff, it gets worse. Sorry, this is technically speaking, but we've got to do this because this is a fundamental-driven story. We don't know, essentially. Unfortunately, that's not the answer you probably want to hear. If it starts to bounce, if it can recover, see, we don't even know, because this candle, obviously, we're still very much in we've got hours left in the trading session. But for example, if it can get back above £2 a share, maybe that's a slightly positive sign. Markets love a good round number. If you can get a close back above this low from the 7th of October, maybe there's a sign there. But of course this is going to be anything at the moment is a counter trend bounce and is therefore suspect until proven otherwise, because you've had so many false dawns here back in 2024. Look at this one from April. We thought it finally bottomed. The answer was a resounding no. Steady recovery and then down again. As interesting, channeling my inner Axel Rudolph, here's your negative divergence on the stochastics here, because you had a lower high from stochastics just about, but a higher high in the price. So there was your signal, if only we had but known at the time, that the price was due for another beating. And the fact it's closed below these lows from early August just means we are in a wait-and-see moment. The price may give us a firmer indication. If you get 2 or 3 days of gains above these lows, then you've got a low you can trade against. And say if it drops back below that low from Monday, then we know that the long trade is invalidated. That would how I'd look at it at the moment. So Blake 7, great name, by the way. It isn't. I think at this point, we're just in a wait and see. Watch it over the next few days, see how this poor beaten down stock gets covered or whether it's just clobbered even more, I think, at the moment. And then finally, but FTSE, we should talk about an index. It's just like charting the markets again. I must try not to go back into old habits. See, this is nice. I like this in terms of a trend. Really, really smooth. It's been above the 50-day moving average for weeks and weeks and weeks and weeks and weeks. And then we get through to September. This is where it's interesting because it's finding support around this 50-day moving average, if you want to put it that way, or around the 9,200 level. Dips below 9,200 found buyers during the course of the middle of September into the second half, which gave you the foundation for the next bounce. And again here, after what essentially was a sideways week, it dropped sharply on the Friday the 10th, and then it spent the week trying to rally, bounce back down again. But again, the buyers came in at 9,300. Here's your sign of a low. And this is what I mean. There's your low being formed. You could say, oh, you could buy it here. You could put your stop like we did with the DAX about 92.70. If you might think it's a bit wide, you could certainly say that 93.40 or so is your real area of interest, your line in the sand, if you like, because that was the mid-August high. We also tested it in early to mid-September, if I can put it that way, 12th of September, and we dropped back again. We finally pushed on above it to new highs, new record highs, in fact. And what happens when we get here? Well, the selling stops on the 10th in this zone, and then on Friday, when it was getting a bit messy, the buyers came back in and it dropped below that level. So there was your sign that it could be that a higher low has formed again. You've not got a stochastic crossover, but certainly the price action is already moving in that direction. So it could be that once again, the uptrend has reasserted itself. And then also SWC. Gosh, you really like me to do these ones, don't you? Always such a contingent. No, it's smart. Oh, it's on ISA. Can I get it on here? We might. I thought I could. Okay. Oh, CFD. All right, let me just switch over then to my less used CFD account, if you can bear with me a second. Most kind of you. No, I know. Oh, it's just not working. I can't do this one. SWC. Isn't live TV fun? No, I've not got an ISA on this one. I'm just old-fashioned. Sorry about that one. SWC, Steve, I apologize on that one. I can't do SWC. I will get an ISA and then we'll sort it out for that one. Good. Any other requests before I... No, I think we're done. Thank you very much, everybody. Thank you for joining us for the week and Technically Speaking. Axel's away for another week, so you get me next week again. Don't forget to like and subscribe, and see you all again on Wednesday for Charting Crypto.